Welcome back to the ICT or SMC Beginners course. Today is episode 3 and we are covering market ranges. The first thing that we're going to go over is what a range is, and you know I like my definitions, so this will be definitive. We're also going to be covering what a ranging market is, as well as what it looks like real time on a chart, and we're also going to be covering what a dealing range and or a mother/parent range is, because these things are different and they are all correlated and connected when trying to analyze and decipher market conditions and what is likely to happen next. Okay, so now let's start off with the most important and fundamental section of this video, which is what a trading range is. And by my definition, a trading range is the area between a definitive swing high and swing low over a specified time. And that specified time is going to be the time frame that you are looking at or analyzing on. So to visualize this, we have this example here. And we should note at this point here that we do have a swing high here, which is formed on this down close or black candle, and a swing low formed on this down close or black candle here, because there's a higher low on either side of the down close candle here, creating this swing low, and a lower high on either side of this candle in the center, making this a swing high. So where is the trading range? The trading range goes from this highest point of this candle to the lowest point of this candle. Everything that falls inside of these two black lines is inside of this trading range. That means that price is ranging or consolidating. Okay, so now let's move on to what a ranging market actually is and what it looks like. So, first thing that we have to do is drop these candlesticks in here, and we can see that we are forming this price action or this back and forth movement inside of this high and this low here. These are what's referred to as your parent ranges. So this is your parent range high and this is your parent range low. This is what is referred to as a ranging market. This can also be called accumulation or distribution, is that is actually what is happening here. We are not making a decision, but we are preparing to make one. So smart money, algorithms, institutions, however you want to think about it, have already decided where price is going, and now they are loading up to make the next move. That's how we want to think about this here. So what makes this a parent range? Now I know this is going to be maybe fundamental for a couple of you, but this is what makes these highs and lows here the parent range. And that is these highs and lows right here, which are your dealing ranges. So this is your dealing range high and your dealing range low, as denoted by the text here, and that is internal to this range here. So the external range, or the further boundaries in this range or consolidation market here, are your parent ranges, and the internal highs and lows are your dealing ranges. There could also be a dealing range high here, which is internal of this dealing range. So this would become your parent range, and this low to this high becomes your dealing range. As you can see, we're just confining price and market structure, and eventually we're going to get a move out of this when smart money decides they've got a big enough position. Now, we're not going to cover trending markets, breaking out or faking out, liquidity sweeps and things like that in this video. Those are a little more advanced, and those will be covered in the future, but this essentially invalidates this trading range here because we're no longer ranging inside of this range here, as this candle breaks out above and then ultimately comes back in, and this could be seen as a deviation. Like I said, those will be in future videos. The important thing to note here is what the parent range and what the dealing range are and what they look like, so you can spot them in your own trading and analysis, because some of you are going to absolutely hate trading in these conditions, and some of you are going to find some of your best trades, your highest probability trades, and they're going to jump out to you more than others. So we are going to need to recognize this, as well as what a trending market looks like, and that will be our next video, because some of you are going to perform much better on those days or on those market conditions. Okay, so now that we understand ranges by a definition and we understand what a trading range looks like in theory, let's hop into today's example, which is going to be on the S&P 500 futures chart, or ES, which is what it's commonly known by. This is going to be on the weekly time frame, once again, just like last episode. However, we are going to be looking at further backdated data here. So I know that learning trading ranges is not super important for any intermediate or advanced trader, but it is super important if you want to understand and properly understand complex or advanced ICT concepts. So while we hop into this, I am going to mark out this swing high here, as well as this swing low down here. this is going to be our parent range for the example. And as you can see, once we create this swing low, we end up coming up and creating this high here, which becomes your dealing range high, as well as this swing low here, which becomes your dealing range low. Now, we're not going to talk about liquidity sweeps. However, we did see one on this candle as well as this candlestick here. So that's a more advanced topic, and I promise we will get to that because it is super important to understand how markets book price. Now, before we hop into trends, I do just want to point out here that this is our range, and as you can see, price gets quite compact here, especially over this period here, which was about a month and a half or 2 months, where lots of people were having trouble trading, and some people really enjoyed it because you could just take liquidity sweeps on either side and pump back up. And if that's you, it's important to understand and recognize these ranges because some people don't like trading them, like I said earlier, and some people love them. So aside from just understanding when these ranges are important and when they are valid, I do just want to point out that it is worth practicing trading inside of a range, recognizing if that's a strength or a weakness, and then ultimately building the discipline as to whether you are going to trade those or just avoid them altogether. Because at the end of the day, the best way to gain capital and compound gains is to simply take less losers, not win more. So with that being said, I hope you now understand what a trading range is and how to spot these things. I do want to hop into trends next episode, which is going to be building on ranges, and we might even touch on premium and discount in that next episode. So if you do have any questions, make sure to let me know in the comment section down below, and I will do my best to answer those. And until next time.